Good morning. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, bringing you the morning comment for the 3rd of June. US payrolls to shed light on high expectations. The US employment report for May will take center stage today, the last report before the Fed gathers for its June meeting. The forecast is for non-farm payrolls to have risen by 164,000 from 160,000 in April. The unemployment rate is expected to have declined to 4.9% from 5% previously, while average hourly earnings are expected to have slowed somewhat. Following the surprisingly hawkish FOMC April minutes and the recent comments by a plethora of Fed officials, including Chair Yellen, that the summer rate hike is still in play, this report may be pivotal to investors' expectations for the next Fed funds increase. We would like to note, though, that recent Fed commentary downplayed the significance of a weak NFP report, stating that numbers as low as 100,000 would still point to a tightening labor market. Given that the report is expected to show another month of solid employment gains, this could increase speculation for a possible summer action and thereby support the dollar. Nevertheless, we maintain the view that June may be too early for the committee to act, given that it may not have enough time to safely assess whether the latest improvements in the data are durable. Elsewhere, ECB in a wait-and-see mode. The European Central Bank remained on hold yesterday, as was widely expected. In the press conference following the rate decision, President Draghi sent the message that the ECB is always prepared to take further action, but at the moment is waiting for the previous easing measures to kick in and show their effectiveness. The bank raised slightly its projections for near-term economic growth and inflation and announced that the buying of corporate bonds will commence on the 8th of June, while the TLTRO loans will start on the 22nd of June. The market reaction at this event remained relatively muted, as the bank's stance was largely in line with what investors expected, and Draghi said nothing that we didn't already know. Given the improving outlook for growth and inflation and the fact that some easing steps are yet to be implemented, we believe that the ECB is likely to remain sidelined for a while. The biggest risk to that forecast is the still low level of inflation expectations in Eurozone, something that Draghi acknowledged when he said that the bank could act again to ensure that the low inflation environment does not become entrenched in inflation expectations. Therefore, if expectations remain at current low levels or even decline further in the coming months, it could threaten the rise of actual inflation and may force the bank to raise its stimulus dose again. OPEC no freeze deal in sight. Yesterday, the OPEC meeting proved to be a non-event as well, as was widely expected, with the members failing to reach a consensus for an oil output ceiling. The cartel indicated that oil prices had recovered significantly since its latest meeting in December, implying that as long as prices remain near current levels, an output freeze deal is highly unlikely. Oil prices slid on the news but recovered a few hours later after the weekly EIA data showed a drawdown in inventories. What we found interesting were the comments by Saudi Arabia's oil minister, who said that at current prices he is not worried about shale oil returning to the market. The key takeaway from this meeting, in our view, is the fact that there were no messages or hints for a likely output ceiling anytime soon. This keeps the door open for OPEC to maintain its current output or even raise it further in the foreseeable future, despite most members operating close to maximum capacity. Now, as for the rest of the day's indicators, during the European day we get the final service sector PMIs from May from Germany and the Eurozone as a whole. But as these are expected to confirm the preliminary estimates, any reaction in euro could remain muted. We also get Eurozone retail sales for April. Norway's unemployment rate for May is expected to have declined a bit. From the UK, we get the service sector PMI for May, and expectations are for a slight rise in the figure. Nevertheless, given that the EU referendum is just a few weeks away, we believe that sterling is less sensitive to incoming data and more sensitive to fresh polls. Given also that the pound did not react at all to the manufacturing and construction PMIs for the month, regardless of the prints, we don't expect any major reaction at this release either. From the US, besides the employment report, we also get the trade balance for April and the ISM non-manufacturing index for May. but in the aftermath of the payrolls report, this data may pass unnoticed. From Canada, we get the trade balance for April. As for the speakers, only one speaker is scheduled for Friday's agenda. Fed Board Governor Lyle Brainard speaks during the day. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade delivered directly to you. Also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, wishing you solid trading.